Well, welcome to this discussion on protecting passion assets, kindly sponsored by ILS World. We've got a terrific panel of expert speakers here that approach the luxury sector from many different angles. But before we get into the discussion, I'm just going to come to Chris Eaton, chairman of ILS World in the Isle of Man, to give a little welcome to this session and to position ILS World for advisors dealing with clients with luxury assets. Welcome, Chris.
Thank you, David, and thank you for pulling this expert panel together. We, as a firm of international fiduciaries, have been acting on behalf of families, private clients, for 3 decades now. And one of the trends we've seen over recent times is a change in the asset class in a number of trusts that we look after, from pure stocks and shares and cash, etc., to more exotic fast cars, gems, perhaps works of art. And whilst this is very interesting and perhaps much more relevant for our staff, actually it brings with it a whole bunch of issues which are sometimes difficult for a pure fiduciary to reconcile. So we often have to go and find ourselves an expert to try and help steer us through some of the issues that I think we'll try and identify today, to make sure that we're doing our job correctly as fiduciaries, looking after the assets on behalf of the beneficiaries, but also allowing them certain discretion, perhaps enjoyment of those assets.
Perfect. Well, just to bring in each of our panelists, on the legal side, Sunita Singh-Dalal from Stephenson, Harwood in Dubai, friend of PCD and regular contributor to our Middle Eastern series. Welcome, Sunita.
Hi, David. Thank you. It's a pleasure to be here with all the gentlemen.
So for those who've not seen you before on our session, Sunita, perhaps give us a little sense of your background and services out of Dubai.
Yes, indeed. I head up the private wealth team here in Dubai, interestingly covering the regions of the Middle East, the vast continent of Africa, and of course, Southwest Asia. Today's session is particularly relevant to many clients and perhaps fellow professional advisors. It's an interesting one because it is something that I think, as the awareness is increasing in terms of asset diversification, we as advisors have to stop our clients being too passionate about passion assets and just taking a step back and doing it properly in terms of acquisition, etc. So a very wide range, a mix of old money and new money, and very, very exciting and extremely robust practice at the moment.
Perfect. Well, thank you, Sunita. And just to come to now our 3 asset specialists, starting with Henry Preux, diamond and fine jewellery specialist based in London. Welcome, Henry.
Hi there. Thanks very much for having me on the panel as well. Yeah, a little bit about me. More than 25 years in the diamond and jewellery industry, over 12 years spent in Antwerp at the heart of the industry doing consultancy work as well as specialising in fine diamonds and jewellery. Moved to London about 7 years ago and based in Hatton Garden, from where I operate a bespoke private client business, selling mainly fine jewellery. Clients choose the diamond. I work with local goldsmiths and specialists to create the pieces, but also some investment pieces as well, either pieces of jewellery or single stones. And that's what I do.
Perfect, thank you. We'll come back to come into more detail. Next up on our panel, Nikola Laurent, who is Global Head of Private Clients at Wine Portal in Singapore. Welcome to you, Nikola.
Thank you very much for having me on this panel. I'm very excited to be here. A few words about myself. So I've been working in the wine business for the past 10 years, including 8.5 in Singapore. I started with a company called Ficofi, which is a private members club of only 300 members worldwide, with a minimum buy-in of 300,000 euros when you join the club. So that gave me access to a certain level of ultra high net worth families, even some billionaires families, mostly in Southeast Asia. Then I worked for a couple of years for a London-based wine investment firm So that gave me a really the understanding of how to look at wine from an asset class, or from an investment perspective, how to use it to pass down wealth from generation to generation, how to optimize the tax, etc. And now I'm heading the private clients business for Wine Portal, which is a Singapore-based wine distribution company, but we also have activities in Hong Kong, in Taiwan, in mainland China, and hopefully one day in Europe and in the US as well.
Perfect, very exciting. We'll look forward to getting into some detail shortly. And our final expert, Peter Wallman, owner of PJ Wallman Classic Sporting Motorcars and Motorboats in London. Welcome, Peter.
Good to see you all, and thank you for the very kind invitation to speak on this interesting panel. I started my career in the advertising industry, but in fact always had a personal passion for collectors' cars. I've owned collectors' cars since I've had a driver's license, and I dreamt about them long before. I transferred into the collector's car business when I was living in Italy with my Italian wife. And I started looking for business for a UK-based auction house. And then when RM Sotheby's launched its business in 2006/7 with an auction at the Ferrari factory in Maranello, I joined the team in London, and we were holding sales all over Europe and also in the US. And RM is the largest auction house specializing in collectors' cars. And in last year, I set up my own business as a broker, working with clients that I've had long-standing relationships with, but I've also extended that into Riva Boats, something else I have a personal interest in and a passion for, and from my perspective, a market which is very underdeveloped and very much in the currently managed and controlled by the local boat yards in Italy. The last 15 years in the classic car industry has seen it mature greatly and huge growth in values across the board.
Okay, perfect. Well, just to come to Henry for more of a discussion around the diamond and jewellery market. Henry, I mean, how have you seen the London diamond trade being affected by COVID? We've had some big headwinds, both Brexit and COVID, that I'm sure have had a strong impact on the industry. How have you seen it from your side over the last couple of years?
Well, certainly COVID has changed things very dramatically for a short period of time, although it was certainly eerie because the street of Hatton Garden, the diamond centre of London, was one of the very few streets that had any sign of activity. Throughout, more or less throughout the pandemic, people were making their way somehow into Hatton Garden because you're dealing with physical, precious things. You need to get there and see them, etc. Everywhere else completely deserted. Very interestingly, prices did not drop. They went quiet, I would say, for obvious reasons. People switched to buying more online. But in the high ticket items, that happens actually very rarely. So things went quiet, but certainly since the economies have opened up again, demand has been very strong and healthy, with prices increasing actually, and most of the luxury groups reporting very successful sales and profits, even compared to 2019 before COVID started. So very positive. It's also coupled, of course, with, like so many other industries, lack of supply, constraints on supply. So there's certainly a shortage of good quality diamonds, which naturally pushes the prices up. So it's become much more difficult to find really nice quality diamonds. So the outlook is certainly positive, I would say.
I mean, how are prices and values determined? What's the process over which, when you say, suppliers can contract, how do people determine the market price for certain quality of?
So the international diamond market is a very, if you like, perfect market. There is a sort of an organization called Rappaport publishes a sort of guideline of diamond prices for each category. And the industry takes note of that and basically prices diamonds on a discount off of that price. And everybody's watching everybody else. So a supplier in India will list his 3 diamonds, and a supplier in New York will look at that and say, okay, I'll pitch myself here, and so on and so forth. So the prices are very, very responsive to changes in supply and demand. And that's basically how the market works. It's also because of the high value small items. It's extremely important to know how your competitors are doing and who it is safe to sell to, if you like. So there's an awful lot of conversation that goes on in terms of determining who is good to deal with, what kind of price levels, where the price supply and demand is up to.
The quality can be very readily determined, so that's where you can get this global benchmark. Is that right? There's certain standards.
Yes. That's one of the reasons, though, why diamonds are not really a commodity. There have been many attempts to commoditize diamonds over the years and to turn them into a very easily investable product. But there are very few categories, actually, of diamonds which you can easily identify as a particular class. There are very many diamonds, and certainly, let's say, if you go away from a round-shaped diamond to what we call a fancy-shaped diamond, be it a pear-shaped, an emerald cut, a marquise, then the evaluation becomes much more subjective. You can't just look at a certificate which says, oh, this diamond is A, B, or C. You need to actually see the diamond. And that's, of course, where the value calculation is much more determined by the single stone rather than the class of stones.
And the purchase, these are passion assets, aren't they? They are assets people want to own as a thing of beauty, but there's also a store of value side, isn't there? So how do you see the balance between it being a store of value or being something that people is an emotional thing that people want to own?
Basically, the way I look at it is diamonds are very much, and diamond jewellery, an emotional investment. You're purchasing the jewels, the diamonds, either it's because you love it, or the person, it's for someone you love. It's a symbol of something. And very often as well, it's something that will be kept and passed on. It's not something momentary. It's something to show a long-term commitment, if you like. And therefore people are getting them to pass on to further generations very often. They're not looking for a quick turn, if you like. They realize that over time, high quality diamonds, because of the scarcity, will certainly hold their value and quite probably increase in value. And there's nothing that beats the delight of a child or grandchild opening a box that they've been left and discovering something amazing, and then, going to a specialist to check it out and being very pleasantly surprised when they hear the value. And that's something that can only happen with natural diamonds and fine jewellery.
Absolutely. And I mean, how do diamonds compare against other jewels in terms of the price and it holding up in terms of its, investment value over time?
I think probably fine jewels as a category are broadly, they steadily increase over time. They tend not to dramatically increase, with a few exceptions. Let's say pink diamonds were the main source of pink diamonds in the world, which was the Argyle mine in Australia, actually finished production last year. So there's no more supply from there. So prices will naturally increase as a result of that. There is a certain sort of fashion element, pearls can be very desirable 1 year or 1 decade, same goes for rubies, sapphires and emeralds. I think across the board, though, what counts is quality. Quality and scarcity. Now, whatever it is, it can be an emerald, a ruby or a diamond. If it is beautiful, if it is rare and special, it will hold its value and it will increase in its value.
And you mentioned London's one of the key centres for diamond dealing. Where are the other centres that around the world that kind of compete with it? Is there a global leader, or is it pretty equal between a few different centres? Well,
I would say London is very much a centre for the UK, and pre-Brexit a lot of European trade, but that's a separate separate small topic. But London, the trading that goes on in London is very much for the local market, which does include Bond Street, etc. So it's quite a strong market. By far the biggest market place is Antwerp, Belgium, where over 90% of the world's rough diamonds are traded and over 50% of the world's polished diamonds pass through Antwerp. So every single day, over $200 million worth of diamonds are coming in and out of Antwerp alone. In terms of trading centers, then I would say Mumbai is very powerful as the world's biggest cutting and polishing center, and then followed, I'd say, by New York and smaller Tel Aviv as diamond trading centers.
Thanks. And as travel now starts to open up post-COVID, do you expect customers to be coming back, trips into London and treating themselves with some jewelry and some investments? You know, lots of commentary around how the luxury market generally is booming. Because
the luxury market is certainly picking up. What remains to be seen is how London copes with Brexit, with two major factors. Number one, Brexit, and number two, the removal before we left Europe of the tax refund scheme. So the top floors of Harrods, Selfridges, etc., had a whole department where people would queue up to get their automatic tax refunds, the 20% on all their purchases. A lot of luxury purchasers are very discerning and know where to go to shop for their luxuries. And the cancellation of that VAT scheme has made, I think, a very big impact. So I'm finding, for example, now that my clients, let's say from the south of France or other parts of Europe, I'm having to ship the pieces of jewellery to them, take care of their VAT declaration at the other end and make sure they have a seamless experience, which adds a whole, several layers of complexity to actually getting the product to the customer.
Okay, very interesting. Thank you, Henry, for getting us underway. I'm just going to come to Nikola now. Nicholas, you help clients build their wine collections. Perhaps you could give us a sense of how you might start an advisory process with a new client exploring this area, perhaps for the first time.
Yes, I think probably the most interesting part about wine discovery is the opening the bottles of wine, tasting, and trying to understand your taste. I guess that goes for all passion assets. That's definitely an enjoyable experience with wine because it pairs with food as well. So it would usually start by a discussion trying to understand the taste of the client, because that's going to be the base. That's going to be what they're comfortable with, and you have to start from their comfort zone, and then maybe slowly you can help them discover new producers from a region they like, maybe different kinds of vintages. If they were always used to older vintages, maybe you can try to bring them to younger ones, or the other way around. And then over time, from a region to another, a discovery path that we often see with fine wines here in Asia is people who would have started their journey in Napa Valley with what we call the cult wines, very robust, full-bodied, Cabernet Sauvignon and Merlot-based wines, like super ratings, high alcohol content, etc. Often enough, they would move to Bordeaux with the clarets, because these are probably, similar in a way, similar grapes, a very easy region to understand because there's a number of classifications that are very old that have never changed. There's only probably 50 plus brands to get familiar with. And then slowly, they discover Burgundy and Pinot Noir. The issue with Burgundy and Pinot Noir is that it is a rabbit hole. There's so much to learn. There's so many producers, so many very small plots of land. So it can be discouraging for some and very interesting for the others. Often enough, a trip to the vineyards is necessary to understand a little bit better, speak with the producers themselves. So that's, I would say, the beginning. And then around that, you're going to try to advise them on, it's the diversification, whether you're going to drink your portfolio or you're going to resell it eventually. You don't want to be drinking the same thing every day, and you also don't want to have all your eggs in the same basket if you're planning to resell later, because when in some periods of time Bordeaux will perform really well, like they did in the 2000s, then maybe Burgundy will be the best performer in the 2010s and still even today, but probably in the future, it will be wines from Piedmont and Tuscany in Italy, probably champagnes from smaller brands, etc. So you want to have a little bit of exposure to everything because you want to mitigate your risk. You want to increase your liquidity in a way. So maybe if at a period of time, some of the wines are not so easy to divest and resell, maybe some others will be more desirable, etc. So we have to try to take all of this into consideration, always starting from the person, the collector, the investor as a base, and then trying to challenge them a little bit into, trying new things.
But I guess the travel and the experience and the knowledge building of the different regional producers, I suppose, then is all part of this experience, isn't it? People don't just flick through a catalogue and then and pick a name off the page. Is that part of their narrative? Is the story that they can tell their friends they went to Bordeaux, they went to the vineyard, they met the producer? Do you find that's an integral part of the interest in the asset?
I think that's essential with every passion assets. You will enjoy, classic cars more after you've spoken to Peter. You're gonna understand and enjoy precious stones better after you've had a chat with Henry. And same thing with art. Like until you meet the artist, or like if they're still alive, or like that's definitely gonna bring an extra component. I think let's forget the past couple of years, but what is amazing today is that Singapore, Hong Kong, Tokyo. Shanghai, Beijing being big wine hubs in Asia, it's not, you don't always have to go to the vineyards to discover the vineyards, because often enough, once or twice a year, the producers would travel to Asia, and then you get a chance to meet them over private dinners, to taste their wines, to hear their story. And definitely that's going to be already really helpful. You're going to have something to tell your friends, or you can even invite your friends over. And obviously the next step is, traveling yourself to get to meet the people on their own turf, because that's going to be a stronger message for sure. A winemaker in their cellar, taking a little bit of samples from the wine barrels for you to taste the latest vintage, which nobody has tasted, will definitely be more interesting, than just having dinner at your regular restaurant, even if it's with the same person, I think. Yeah.
Well, it's widely reported that the tastes in China for fine wines, the amount of wealth created in China, equally widely reported. I mean, what do you see there of the trends for collectors? Is there increasing knowledge, sophistication, and interest in collecting the key wines that has built over a relatively short period versus European collectors and investors? What do you observe of the trends out of China?
Yes, good question. I think I'm not so knowledgeable about the Chinese market, but as it's one of the largest ones, we are all aware in the wine world of what's going on there. The interest for fine wine probably started in the mid 2000s to late 2000s, with a strong interest for Bordeaux wines, especially for the first growth, such as Lafite, which was the strongest brand, which was used a lot for corporate gifts, or for gifting politicians, etc. So that really started from Bordeaux, from the top 5 names, and then slowly cascaded down to the second labels of these 5 brands, and then to other wines. And then taste has evolved. There has been a little bit of distrust toward Bordeaux because the prices went up a little bit too quickly. There was a bubble that burst in the summer 2011 for Bordeaux. And then, again, they started looking at other brands at Burgundy. And again, like the top brands such as Domaine de la Romanée-Conti DRC, Domaine Leroy, Domaine Armand Rousseau. These are probably the most sought after wines in China. I think basically what happens is that when you have available a very large amount of wealth, you're going to start from the top. So you're going to start for the brands that are most recognized, because they're probably, you want the best. If you can afford the best, you want the best. And often enough, there's still, a number of vintages you'll be able to enjoy from these best wines. But you will also focus only on the best vintages, like your top 5 vintages of the past 30 years. You will focus on the top ratings as well. There are wine critics rating the wines every year. So that's also a reference point for collectors. So I would say in China, wine drinkers are really driven by brands, by ratings, by the critics, by the top vintages. So it's really focused on a tiny number of wines. So there's a very high concentration. These are obviously going to be the names that you're going to read about in the news. They're going to break records at auctions, etc. But that's really the top 1%. The next 10%, which is probably the most interesting, often enough remains undiscovered, I would say. So I think that's the job from people like me, passionate, and from the industry, to try again to challenge people a little bit and bring them to, you know, the second tier, which is probably almost as good in quality, but just less renowned. Yeah.
Okay, thanks. And what are some of the challenges of building, owning, and selling a wine collection? They've, you know, clients started to invest, and then how do you help them navigate the rest of that journey?
I would say there's probably three, or if you're into reselling, there's two things that are really important. One is provenance. So who are you buying your wines from? It's not so important for the latest vintages, but whenever you're starting looking at slightly older wines of vintages that are really sought after from, let's say, the 90s, the 80s, or even older, you better be careful, because there's a number of fakes also going around. So that's something you want to avoid. So you have to make sure that the people you buy from are reliable. You can ask who they bought from themselves, you know, and try to track the provenance back to the producer. I would say that's very important, and you shouldn't mind if, you know, maybe you're spending a little bit more, but at least you're reassured that the quality of your wines will be good. So it's not only where they were bought, but it's also how they were kept over time, how many people own them over the past 20 years, because like a bottle of 1982, let's say Chateau du Cru Beaucaillou, could be like, if you get the latest ones that were recorked at the Chateau 10 years ago, the wine will be fantastic, the labels will be pristine, and there's going to be the stamp from the Chateau saying 10 years ago, okay, this is still like fantastic. Or maybe you could end up with a case that has, over the past 40 years, maybe gone around the world 3 times, you know, in the US, in Dubai, in Hong Kong, in Japan, and around and around. And, you know, sometimes the temperature in the cargo may have been a little bit too high, or maybe the container was forgotten in the sun or whatever. So provenance is key. The second factor is, where are you storing your wines? So you should always store them in bond, which means duty-free, in order not to attract the VAT in the country they're kept. So the largest places where wines are stored worldwide would be in the UK, around London. So that's probably the main storage, let's say. Another one is the Freeport, so also duty-free in Geneva, Switzerland. And then next would be Hong Kong, where there's no tax. So whether you keep duty-free or duty-paid, it's the same. And Singapore as well. The thing is, where you're going to be most liquid when you want to resell your wines is London, because it's still the global hub for wine trading. So when you sell from London, you can resell anywhere. You can resell to Geneva, you can resell to Hong Kong, you can resell to Singapore. But if you're in Singapore and you're trying to resell your local stock, you will only be able to resell to Singapore and Southeast Asia. It's fine. There's still going to be demand for your wines, but it's not going to be as strong as if you're as close to the source as possible. So buy from reliable sources. Never mind if you pay a little bit more than, you know, the minimum price, but at least you'll be reassured. And store in professional storage in bond, so that only, like, if you resell, only the person who will take physical delivery of the wines to drink them will pay the final VAT, but you will not. You will be exempt of this tax. Yeah. Okay,
terrific. All right. Well, thank you, Nikola. I'm going to come now to Peter Woolman. Peter, welcome.
Thank you.
So you help clients with classic car collections and boats, as you mentioned on the top. I guess these are the real definition of passion assets, in the sense of people aren't buying these assets for their store of value, their investment. They're buying them in order to use and enjoy them. How do you find high net worth clients sort of start on a journey building a collection with you? What's the origin of it?
Well, I think you're absolutely right. We'd like to think that not many people are buying them purely as for their investment value, but clearly that does play a part in it. It's if you're spending a few $100,000 or a few million on a motor car that you don't necessarily need, it's nice to think that in 10 years' time when you sell it. But the trick is also to not flood the market. And I would echo many of the things that were just mentioned in relation to wine. And I think you have to start to experience the car market at the beginning. I think you have to attend events. There are some wonderful rallies, race meetings, concours d'elegance, and find out what it is that inspires you. What do you want to do with the car? Are you buying it just to fill a garage? And if you live in a major city, then that can be a very expensive hobby. Or are you buying it because you want to go motor racing, because you've seen the Mille Miglia or you've seen the Colorado Grand in the US, and you feel that you'd like to participate in that? Or you've been to Pebble Beach or Villa d'Este or Goodwood. And I think that for me is really where the initial aspiration comes from. And as well, many people remember the cars. You know, we talk a lot about poster generation cars, you know, people that grew up in the 80s and 90s. They had pictures of things like Lamborghini Countachs on their wall, and they remember them well. And once they've made enough money to buy them, they will go after and buy one. That's really been fueling a younger generation and a trend towards, if you like, younger classics. But I think since Brexit, some of that is going to be challenged, because the great difference with motor cars compared to if you move them around Europe, previously there were no tax implications to that. There were no VAT implications because the VAT was paid in the country of origin. Whereas today, post-Brexit, if the car is over 30 years old, you pay reduced VAT. So if you buy a car in Italy and you want to register it in the UK, you'll pay 5% VAT. But if it's under 30 years old, you pay full VAT, 20%. So there are elements of Brexit which will have a major impact, particularly when it comes to younger classics. But I mean, coming back to your point, what it is that motivates people, I can speak from personal experience. I can remember seeing classic cars on the road when I was a young lad, spoke to my father about them. And for me, classic cars were represented by cars with wire wheels and lots of chrome and, raspy sound and exhaust. And perhaps a convertible, and I'm not old enough quite to think about cars from the 1950s with the flat cap and the pipe hanging out of the mouth in the English countryside. But equally, I do remember cars. They looked different to anything else. They were sports cars, and that was the thing that really got my interest as a young man. And for a long time, frankly speaking, they were actually quite affordable. I bought a little MGB with the small budget I was given by my father for my first car, and I paid the same price as other friends who were buying Volkswagen Golfs and Polos. So, and I made a bit of money when I sold it.
And on that, in terms of maintaining value of these investments, as you say, if you're putting hundreds of thousands, millions into an investment, you want it to hold its value, at least if you're going to enjoy it. And I suppose the challenge there is a variety of maintenance. How do you make sure it's properly insured, looked after, kept to a level where it does maintain its price? I mean, perhaps give us a sense of some of the challenges of being an owner of one of these vehicles.
Well, I think the greatest challenge is, if you want to use it, you need to store it close to your home. And what I see quite often is people that do have places. In fact, I have a car for sale right now, and the gentleman lives in central London. He has to store it, on the outskirts of London. They're rarely open on the weekend, and that's when he wants to use his car to go out for a drive in the countryside or to visit friends. And he comes back, and you have to make a lot of arrangements. So that spontaneity, that opportunity to be spontaneous with your cars in order to use them is important. But other costs are actually relatively well catered for. I mean, there's no road tax on older vehicles. They don't require an MOT, although I think that's personally not a good idea. I think routine maintenance is incredibly important. And insurance costs are very affordable, because these cars, the insurance companies know that they're owned by enthusiastic owners. They know that they're in general going to be well maintained, and that they also know that they're used infrequently. So they'll give you a limited mileage insurance policy. You can do 3,000 to 5,000 miles a year. and you'll be paying, under £500 to insure a reasonably valuable classic car. Of course, if you're dealing with a $20 million Ferrari, it's going to be different. But generally speaking, they're quite affordable to run and maintain. The big challenge is redoing somebody's poor restoration in the past. So I think the best advice we always give people is like with diamonds, like with watches, like with wine, buy the best you can possibly afford and make sure somebody else has gone through the pain of the restoration costs. Because if you're buying a car, let's say sub £200,000, and take something like an E-Type Jaguar, you could easily spend the better part of that if you did do a full restoration on it. So that's really what's been forcing values of the cars at the sort of middle end of the marketplace up. So,
and on the reefer boating side, is it's similar principles to maintaining value, maintenance, and storage, and looking at how you're looking after the asset? Is there anything different in the boating world?
Not really, apart from, I think, their image is that they're incredibly inconvenient and expensive to maintain. And I can only speak from personal experience. I think if you have a classic wooden reefer in the harbour at Saint-Tropez, or in which doesn't specialise in reevers, then it can start to get very expensive, and you're exposing them to salt water and sun. And if they're out in the water all day throughout the summer, the combined effects of the sun, the salts, and all of and use will start to deteriorate, make the boat deteriorate much more quickly. But if you keep them on a freshwater lake and you store them out of the water in a specialized Italian boathouse, the maintenance costs are relatively affordable. Probably no more than a classic car of a similar value. And also, actually, if you've got the right boatyard behind you, which is essential, you can't self-maintain a reefer boat and put it in and out of the water. But actually, people say, oh, you need to revarnish them every year. It's just not true. You may need to change the wooden bottom of the boat every 10 to 15 years, depending on how it's been used and maintained. But what I find fascinating about that market is many of these boats were sold to aristocrats, to celebrities, to royalty when they were new. And there are quite a few reevers. In fact, I would say the vast majority still with the second or even first, second or third owner. So they change hands quite infrequently because they're not sitting in the garage taking up a space. They're in a specialist boatyard on an Italian lake. So they're sort of out of sight, out of mind, until they suddenly wake up one day and say, I fancy going for a picnic. So there are some good opportunities in the reefer market, in my view, because they tick all the boxes that one is looking for with a car. It's you're looking for something that's very original and only had one or two owners.
And valuation in the classic car market is determined, I guess, on the key auctions, on specialist valuers who know the prices inside out and market trends. So it's fairly easy to establish a fair price, is it? Or what's the process around valuation on the classic market?
Again, it depends really. Most cars have been built in a volume, a quantity. Obviously, rarity plays a major part in that. And if you take something like a Ferrari 250 GTO, which is one of the most valuable cars out there, they're valued at around $70 million. There were only 36 made. And of course, each one is unique. They have race history. They've had celebrity owners. They've had race driver owners. So the pedigree counts very, very much in that case. But with other cars, there's usually comparables. You can look online, look up auction results. You can see what other people are paying for their cars. Most auction results you can view, including buyer's premium. The key is looking at taxes and extra costs. I think today more than ever, around Europe, as I say, there was free movement of the cars around Europe. So you could buy a car in Italy, register it in the UK, and it would cost you nothing. Now it will cost you at least 5%, and in some cases as much as 20% VAT. So you're immediately priced out. So that is creating some friction in the classic car market, because people had good relationships with dealers all over Europe and the US, and there's a lot of trade between Europe and the US. A lot of Ferraris built in recent years, supercars, were only ever made in left-hand drive. So, they were built for the European and US market, and a lot of UK buyers would buy them from Europe. So clearly the extra costs there make a difference. So you've got to buy it. You're not going to buy it 20% below its market value. So you've got to be prepared to hold for a while.
Great. Well, thank you for that, Peter. Sunita, just to bring you in, we've heard there from our asset specialist. It'd be great to hear from you, your sense of development in the Middle East of taste and trends in luxury asset ownership and anything you can observe there from the region.
Yes, no, indeed. Certainly, what we have seen in the Middle East is perhaps not so much more so in terms of acquisition, but preservation of what they've already acquired to date, or more importantly, preservation of ancestral legacy wealth in terms of artifacts, luxury jewels, ancestral jewelry, art collections, antiques. So that's something that is definitely, I mean, in the past 6 months, we've actually published, the team and I have published a focus piece just on foundations and art itself. And that was done in response to where I had identified a trend of an uptake during the pandemic of people buying and selling art. The sellers were perhaps selling for distress reasons, which is always very sad. Buyers perhaps buying for emotive reasons, which is always something that one has to be very cautious about. So it's our job, I think, as advisors to hold them back and take all the steps that the gentlemen have been speaking about in terms of checking to see if what is being sold is indeed the true, authentic item, whether it's a car, whether it's a pink fancy diamond, or whether it's a coveted bottle of whiskey or wine. So due diligence is very, very important. We've heard of a client recently who thought he was picking up an amazing classic car, and when the insurance company was sent in to evaluate and take care of matters from their perspective, they found that basic details such as chassis numbers were completely, should we say, we're not harmonious, we're not matching, and the poor chap, but thanked us for it, because of course we saved a lot of heartache, and then one had to take care of matters in terms of restitution. Also found during the pandemic, families who are being more aware of how they can leverage ancestral assets and collections of art. So again, in this part of the world, and most of the families that I work with, we don't talk about money and we don't talk about what we possess. So privacy, confidentiality is key, but perhaps it's the next generation who are educating the founders of the family about leveraging or generating an income from an asset or a set of assets in a particular class. So art. And very interestingly, using the foundation structure, which does allow a certain amount of confidentiality in terms of the public persona as such. A foundation structure works very well in terms of protecting the asset, preserving the ownership of it, preventing the next gen in a kind of worried hissy fit of debt, disposing of the asset or encumbering it in some way, but also enabling that particular asset to then be loaned across, whether it's to an art gallery, a museum, and then generating that. But so we've seen some really interesting trends. In fact, I was listening to Nikola earlier on talking about wine and hubs as to where the traditional storage facilities are in terms of global. Would you believe that actually in the UAE there are investors in the wine world when the wine is being held here and stored here under the right climatic conditions, etc., but in bonded warehouses? So times are really changing, and it's just very, very important, I think, from our perspective to, like I said, make sure all the right questions are asked. Make sure title and the investigative, sometimes the boring bits we have to take care of. Sometimes it can be very exciting because then, you know, one can go on and actually do some on-ground physical DD, depending on what the asset is. So that can be quite fun. You send your team out to take care of that. But more often than not, it is certainly a diversification of the traditional portfolio of assets. So here again, in the regions that I cover, the wealth is very traditional, and sometimes I think of it as almost one-dimensional. It's almost identical in terms of developing economies. Wealth has been concentrated in but a handful of families. And so therefore their asset classes are almost identical in terms of, you'll have in this part of the world wealth that has been amassed because of real estate, or for example, businesses driving economies. So a handful of families owning key concessions, whether it's the Ferrari concession or whether it's the consumable FMCG. And now you have the next gen coming in saying, well, how can we diversify further? In India as well, we see amongst the next gen and amongst some of the emerging industries where they're learning to capitalize on their offering. For example, in the entertainment industry, we're now receiving a significant amount of inquiries from Bombay, from the entertainment industry, where people are looking at the NFT kind of crypto aspect of ownership of art or generating income that way, and then looking to the Middle East to house that or to structure it or to even list it. And so this is where, again, we've seen the Abu Dhabi governments, the DIFC, the two common law jurisdictions that we have, providing platforms for such assets to be owned in a very sustainable, safe environment. I mean, who would have thought that 15 years ago, that there may be a bonded wine storage facility in the Middle East of all places? But no, we have. I mean, some of the best wine I've had has come out of Armenia and Lebanon, respectfully. And some of the best whiskey that I recently tasted was down in Goa at the Paul John facility, where I'm told that actually some of the vintage barrels and the casks can fetch a tremendously globally competitive price. So times are changing, I think, and people's tastes and aspirations are changing for sure. The pandemic, we've seen, of course, clients in this part of the world looking more at aviation acquisitions, perhaps not so much traditionally passion assets, splurge a little bit, but now that passion has been converted more into a necessity. So there again, look to experts like the Stanton Aviations, the Kendras Flies, to help the client make sure that what they're buying is right, they're buying it in the right way, has title passed, or ticking all the boxes. So from my perspective, it's about working with the experts, such as everybody on the panel today, but also working with a wider group of experts to ensure that what the client really wants to buy, they do get. And it's done in the acquisition is done properly and in a sustainable manner. So very, very, very exciting. I've always got to stop the next gen when they go a step too far, for example, and get passionate about marijuana farms. That ain't happening just yet, but well, each to their own.
Thank you, Sunita. Just to bring Chris Eaton back as we round off this conversation and come to our Q&A. Chris, some really interesting themes there picked up by each of our panel of asset specialists, as well as Sunita on the structuring side. What are your thoughts on this whole field and the challenges, I guess, of being a fiduciary or administering these luxury assets on an international basis for such clients?
Yes, I mean, I think the discussion's been fascinating, and each of the asset classes we've talked about the guys have expanded my knowledge, but also my concerns in being a fiduciary. If we've got trusts with some of these assets in, and we do, you know, how do you as actually the owner of the assets make sure that you're on top of what the issues are if you're not the one that's passionate about them? You know, I didn't know that pink diamonds have gone out of existence, and therefore if we had any in a trust structure, that the value may have gone up, and if the value has gone up hugely, we need to be presumably changing the insurance premium that we're paying. Does the insurance company have the same expertise? Will they be adequately covering the loss or theft of any of those assets? And each of the assets is very different in terms of how long they may last. Jewelry, obviously diamonds are there in perpetuity. Cars will rust and just be overcome by other models in due course. Wine will have its own sort of best before dates as well. And And I think the message I take away with me is that if you are a fiduciary operating in this space, and I think we will see more and more of this over time as we get more multi-generational asset value, wealth in the Middle East, and more internationally based families, the fiduciary structures that are owning these assets efficiently, certainly for inheritance tax and other purposes, we will see more fiduciaries, more trusts, and more trustees getting involved. Is you've got to rely on the experts. You shouldn't take anything for granted yourself. You need to be talking to the experts all the time, making sure that the way you're holding the assets, where you're storing them, how you're insuring them, who you're giving access to, it is done in the right way for the benefit of all concerned.
And how have you seen some of the practical implications of clients where there are structures with these assets underneath? They want to enjoy, use those assets. That creates a tension for the trustee, doesn't it, in terms of making sure those assets are going to be properly maintained, cared for, and value maintained over the long run. So how do you approach that from a practical perspective, what you've seen at ILS?
With great anxiety most of the time. We do have trust structures with some very valuable cars in £5 million plus. Now, for as long as they stay in the storage facility and they're properly maintained and insured, that's fine. But if one of the beneficiaries or the settlor comes along and says he wants to take it on a rally to Monte Carlo, then I get worried. Likewise, if we've got valuable stones, then of course they will want to be enjoyed. Of course they will want to be used. But if it's a big gala dinner, things happen. If that piece of jewellery has been handed down, perhaps over the generations, perhaps it doesn't fit around the finger of the person that wants to enjoy it quite so well as the previous owner. Perhaps they lose it. What happens if they lose it? All these things are worrying from a fiduciary's perspective. Yes, they can be insured, but when you don't actually have the passion yourself, and when you don't actually have control or use of the asset, then it does bring certain anxieties in. So you just have to approach it sensibly and try and make sure that you put whatever sensible protections around the use, enjoyment, etc., as makes sense.
Sunita, I mean, what's your perspective on that, and some of the practical side of managing assets within these structures, as Chris has outlined?
Yeah, I think there's just one slight nuance or development that we've identified here in the Middle East, and perhaps it's worked to the advantage of people like Chris, and will save them the anxiety factor when they act as fiduciaries and trustees. And that is, of course, the foundation structure is incredibly versatile, but there's another fundamental difference there. The foundation structure acts as an entity in its own right. So it actually owns the asset, and it exists for the benefit of a group of people. But unlike trusts, where assets are registered in the trustee's name, and therefore the level of the fiduciary duty is automatically onerous by default, and it comes with the territory. The council members who are responsible for the day-to-day management and administration of the foundation do not owe a fiduciary duty to the what we call qualified recipients, or what you would know as beneficiaries. So there's a really interesting distinction there. And I think that's also something where I have encouraged the fiduciary professionals to kind of sit back for a moment and think about. Also, this conversation highlights the need to sit back and take perspective and look at alternative structures that not only are a win for the family or for the client, but actually more so they make the management of these assets a little more manageable for the fiduciaries who are involved. I'm not saying that means one can be very lackadaisical about it, or the duty of care is any different. I'm saying that to whom the duty of care is owned is a completely different conversation, which also therefore means, by virtue of that, unless you've been horribly negligent in performing your duties as a council member, it also minimizes the potential, how would we say, contentious emotive litigation that is sometimes launched against trustees by beneficiaries who don't perhaps get the fancy diamond split 3 ways, because you can't do that anyway. But from a more practical perspective, looking at it holistically, there is a change on the ground. And so for those of you that are actually advising clients in terms of acquisitions, or like yourselves here today, gentlemen, are on the end where you are helping somebody or you're facilitating a sale, do take a moment to think about how that asset is going to be held. And just as I would look to each of you for your expertise, you know, pick up the phone and ask questions, because there are new solutions that are breaking the traditional mold and making this a lot more easier, perhaps, than we think.
Many thanks. Well, a good point to take some questions from our audience, which we look forward to doing so now. So thanks very much to the panel for this discussion.